Today we are covering how to handle credit card processing fees in QuickBooks. Now, we're not covering lump sum fees where at the end of the day, all the transactions receive one charge, a flat charge from the processor. These simply just get recorded on credit card fees as one total. What we are discussing is when on a per transaction basis, the credit card fees need to be recorded. Some businesses may need to have that. So the scenario here is my client gets charged a credit card fee and passes the fee on to his clients. The bank fee is withheld from the total amount received from the payment processor. How do I account for this in QuickBooks? So let's look at this scenario here that perhaps, let's say you have a $100 sale and the credit card processor charges a 3% fee. The business passes a fee on to his clients to make sure he covers that entire 3%. He's going to charge maybe 3.15% or 3.25% to make sure the entire fee is covered. Remember, they're charging it the credit card processor is charging it on the total amount charged, which includes the fee. So let's look at how the IRS perceives the bank and credit card fees. It perceives it as both income item and an expense item depending on the character of the item. The fee charged to the customer at the time the transaction is made is income to the business and will be included on the 1099-K for the year. The fee charged by the payment processor is an expense to the business. So the two fee amounts may be the same if it's a flat rate. You may simply pass on uh, a $2 flat rate fee from the payment processor and charge that exact same amount to the customer, or may be different if it's a percentage-based fee. So let's look and see what a 1099-K looks like in case you have never seen one before. So the boxes that you need to be concerned with are box 1A, which is the total amount of the transactions for the entire year, including credit card fees if charged to the customer. So let's say your payment processor processes MasterCard, Visa, Discover. They'll all those together from the one payment processor will be included. They will not be broken down. If you have different processors, you should receive a 1099-K from each processor. The next box you would be concerned with is box 4, which is federal income tax withheld by the payor if required. So it depends on um, your payment processor. If income tax is withheld, a lot of times this box will simply be blank and you do not need to worry about it. And then boxes 5A through J are the breakdowns for each month of the total amount of the transaction that was charged for that month that was processed by the payment processor. So this includes the sale plus the bank fee that was charged for each month. And this you can verify against your records. So that's why they break it down here, so you can make sure these amounts are accurate. So let's look at the breakdown of the numbers here. We have a $100 sale. We have the credit card processing fee of $3.25 that you are charging to the customer, which is 3.25%. We have the total amount of the sale collected when you add those two numbers to 103.25. The fee charged by the bank is 3% of that entire amount of 103.25. So the bank fee is $3.10 that gets charged. So the total amount deposited is $100.15. So you can see the correlation here that because it's not a flat rate fee, the amount charged to the customer and the amount charged from the payment processor is not the same. So in order to make sure that the entire fee is covered, you're charging a little bit higher rate. That is, of course, considered income because you are charging more than what the expense is. So this is why the IRS considers that as income. And it's shown on 1099K as income. So we look at the general ledger entries, or the general journal entries rather. The checking account will be debited for $100.15, the amount of the deposit, and then your bank fee expense will be debited for $3.10, which is the amount charged from the payment processor. Your sales will be the $100, which is the amount of the sale originally before any fees. And the bank fee revenue will be the amount of the processing fee that you are passing on to the client. So when you add up your debits and your credits, you have 103.25. Your accounts are in balance. So let's look at an actual invoice in QuickBooks and see what this looks like. So we have the invoice number of 1016 at the top. We're using an existing transaction inside the Craig's Landscaping Company, the QuickBooks test drive. We're doing the invoice date of July 7th. Everything will be handled and processed on the 7th to make everything, the reports easier. Of course, now you want to make sure in your product and services you have the landscaping or whatever the sales account is. And then you want to make sure you have a credit card fee added to your product and service as a service. If you don't have one, you'll need to add one. Your sales amount of $100 is showing. Then the credit card fee that you charge to the customer is $325. So that's your invoice total of $103.25, which we've seen on the previous screen. Okay, so the next thing we're looking at is the receipt of payment. The client has paid us with his credit card on the same day. So we're going to show this as a MasterCard payment. We're going to deposit it to undeposited funds. It's very important. That's where the funds land. And since we already have selected this receive payment from the invoice number, that's what's chosen. And it's a full invoice amount of 103.25, which includes the fee that is being passed on to the client. Now, after we have received payment, we're going to look at the bank deposit, where again, we're assuming everything is happening on the same day. So we want to make sure this is deposited to the checking account. And we're going to verify that we have chosen the correct invoice from the undeposited funds account. So this is invoice number 1016. We're going to look at the Cookies by Kathy and that it's a MasterCard payment for 103.25. And so therefore we've verified this is the correct invoice that we're depositing. And then on the add funds to this deposit section, we're going to select the expense account of the credit card fees or bank charges. This is going to be the amount that the bank is withholding before they send the deposit in. It's what the processing company is charging to the client. And we're going to enter this amount in as a negative number because we want this to be subtracted from the invoice amount of 103.25 to give us our true deposit of $100.15. So this again, we're doing this when the credit card processing company, we charge the customer 103.25. The processing company withholds their fee of $3.10 and they deposit in our bank account the $100.15 difference. So this is how we're showing this in QuickBooks because again, we want to make sure the deposit in QuickBooks matches the deposit that's going to show on the bank feed. And so this is how we get it to show. And this also serves a purpose of tying in these three transactions together, or these three parts of the transaction. We want this fee tied into this invoice, and we want this invoice and fee tied into this deposit. So this ties all three together for our record keeping. So now that we have entered all the transactions in for the day, let's take a look at the general ledger. This is the reason why we chose to have everything happen on the same day of July 7th. So that way we get a report that shows all the transactions in one report. If we had this spread over multiple days, which would happen in reality, it's harder to show the report um, in the general ledger. Other transactions would be mixed in with it. But since we want to get the numbers simply from this invoice we're working on, we've chosen to put everything in under the same date of July 7th in this example. Now, the accounts receivable account and the undeposited funds account, we didn't actually make physical entries to those accounts, but they do have numbers from the other entries that we put in, the matching accounts. So accounts receivable was debited or added to when we processed the invoice. And then when that got paid, it was credited and the amount added to deposited funds because payment was received. Then once we actually took that payment and made the bank deposit, then the undeposited funds was the amount was removed from undeposited funds. So that's why those are showing up. They're canceling each other out. Those really are not the line numbers we're concerned with. We're concerned with the other four lines. So we have the landscaping services, which is our sales account. So sales, of course, are credited. We have the bank fee revenue, which is also the income. This is what was charged to the client, the fee passed on to the client for $3.25. That made the invoice 103.25. Then we have the checking account deposit. This is the amount received from the processing company after they took out their fees. That's $100.15. And then, of course, the bank fee expense was the amount that the processing company withheld for this particular transaction. So we add up all of our debits and all of our credits. We have a total of 309.75. So our debits and our credits do match. So now let's compare our original general journal entries that we looked at with the general ledger after the transactions have been processed in QuickBooks. So we see that the checking account and we have a journal entry of $100.15 debit, and that shows up correctly on the general ledger. We have a bank fee expense that is also debited for $3.10. That is showing up correctly in the general ledger. We have our sales credit of $100, which shows up correctly as a credit for $100. And then we have the bank fee revenue, which is also income and is credited for $325, which again shows up correctly in the general ledger. Now you may be wondering why the journal entries, debits and credits total up to 103.25, and yet in the general ledger it's three times the amount of 309.75. Remember, the journal entries are the actual entries that we made based on our transactions. But the general ledger includes the actual transactions that we don't even enter in for the accounts receivable and undeposited funds. These transactions happen automatically based on our journal entries. Those are the accounts that are affected by our journal entries, and they are the debit and credit opposing accounts. So everything is matching. So that means we know we did everything correctly in the QuickBooks because it's matching our journal entries if we had done this by hand. So remember that the point of this tutorial was to how to handle in QuickBooks when the payment processor withholds a bank fee from a payment of yours that they processed. They keep their cut and then give you the balance left over. It is similar if they withhold on a daily basis or on a monthly basis all your payments that were processed and then take out one lump sum and don't associate to a particular invoice. It's similar with the bank deposit by making one entry for the deposit and using a credit for the bank fee expense on that deposit to bring it down to the true amount that was put into your account. It's not handled on an invoice level like we handle today. That's really the only difference. Otherwise, the same concept applies. So I hope you found this tutorial to be very helpful. And if you have questions or comments, please go ahead and put them in the comments section below, and I'll try to get back to you if I can. If you add your email address, I'll send you a direct email. Have a wonderful day.